Okay, so let's stick with foundation talk and talk about donor advised funds, commonly referred to as DAFs. To be clear, I'm just going to present an example, Ted, and then I'd love to use your $1 trillion number that you threw out. So donor advised fund. So you could have a donor advised fund. This is a wealthy individual or family or whoever, and they want to open up a way of providing grants to organizations wherever. So you can have this at a community foundation. I'm calling in from, I'm on the Zoom from Sonoma County. So let's just say that I have a DAF, donor advised fund, at Sonoma County Community Foundation. So as the Mark Rand Donor Advised Fund, I can then send out grants whenever I want to, but I get the 501c3 write-off that day. And then those funds sit at the foundation, and then I can just write grants from my little DAF from now until eternity, usually domestically, internationally, wherever you want to. So that's a DAF. But in the meantime, those DAF dollars sit. So I have $1 million at the foundation.
Congratulations, Mark.
Thank you. And it's all for you, Ted.
Okay.
So I have $1 million at this foundation, but I'm going to write my my 501c3, right? I'm going to write my grants this year, and maybe they'll total $100,000. So, but in the meantime, that 900 is sitting there. $900,000 is just sitting there. That is going to be used for philanthropic dollars. So that is the money that a lot of us are focused on, because what is the purpose of those funds? Number one, why are they sitting there, and how do you engage them? So typically at foundations, those DAF dollars are invested, and the DAF holder, me in this case, can choose. I typically want this to be for whatever money market. I want some money in the stock portfolio or bonds and da 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 da. So you can invest it with a an investment policy and all of that. However, those dollars are going to be used for philanthropic purposes ultimately. So why not use those dollars now and invest those in great companies? So let's kind of open the dialogue around that. Ted, I think you threw the $1 trillion number out. I don't know exactly where that comes from, but I wouldn't be surprised.
That's the whole field of private foundation endowments and donor advised fund endowments in the U.S. But donor advised fund endowments are doubling every 4 years. Yeah. So they are growing very, very quickly.
So let's talk about how best to engage those dollars. So again, I'm a DAF holder at this foundation.
Right.
What are my options? How do I say, great, I want to make these investments into small companies in Vietnam? Ted, how does that work?
So most folks that have donor advised funds, unless they have very large donor advised funds, may not even remember what box they ticked when they first opened their account. Chances are, if you have a donor advised fund at Fidelity Charitable, it's probably invested in one or multiple Fidelity mutual funds. If your account's at Schwab Charitable, it's probably invested in one or more Schwab mutual funds. And at a community foundation, it's managed by a professional money manager, probably invested just the way everyone else there has their money invested. What we offer is that people can make a grant out of their donor advised fund. We use a fiscal sponsor, Realize Impact, that accepts that grant. It's simply a grant to a 501c3. You can make it out of any donor advised fund in America. And we, in return, promise to repay that money to Realize Impact and ultimately back into your DAF once a year over a 7-year period, or we can hold the money for this full 7 years and return it all at the end. And so we've made the process simple and as frictionless as possible so that more people can use this untapped money for the impact that they want to see.
So as a DAF holder, to be clear, I would then grant money out, which would then come back?
Correct, right into your DAF on the schedule that we agree upon. And so okay. we make it super easy. We've taken donor advised fund money from more than a dozen community based donor advised fund sponsors and national donor advised fund sponsors.
Okay, great. David, how about at your shop? How does that work? I've got $1 million I'm sitting on. I want to invest it in small businesses in San Diego.
Wait a minute, I
Sure.
thought that was coming to me.
Yeah.
Ted, I
He's
got
got
multiple
two
million.
DAFs, Ted.
Yeah,
I've
He's
got
got two
multiple
DAFs.
DAFs, Ted.
Oh,
I just
sorry.
said one.
Yeah, silly me,
Mark
silly
has
me.
opened $1 million DAFs all over the US just to make impact investment happen
Oh, thank
at these
goodness.
different places.
Okay.
So for us, we, like Ted, we're also a partner with Realize Impact. So that recoverable grant option that Ted talked about through Realize, it works great. With some community foundations, we are a direct approved fund manager on their platform. So we started here locally with the San Diego Foundation and the Jewish Community Foundation. So, and we're now working with others around the US for those that are willing to approve direct investments in us, where a donor advised fund can allocate either directly, or some of them are spinning up impact investment pools, where in addition to choosing your money market or your short-term or your long-term pool, you can choose an impact investment pool, of which a fund like us can be one of the investments. That's at the individual community foundations and the more flexible sponsors like Impact Charitable and those types of things. The Fidelities and the Schwabs, it's not a direct investment. The option there is generally through the recoverable grant through Realized Impact, which works great. We do those all the time. It's wonderful. So there is no reason today a donor advised fund who wants to do impact investing has any prohibition from doing
So
that.
why,
It's all
why is all
doable.
this dough sitting there?
Well, if you want to go with that,
Inertia.
the inertia, knowledge, it's no different than we were talking earlier, whether for foundations, private investors, whatever. Are individual people set up to due diligence all the deals they want? No. So that's one issue. They got to find, they have to want to do the deals. That's the inertia. But I'll just go with donor advised fund sponsors have a fundamental business model issue that they don't actually have any incentive to move the money out. This is what sort of blows my mind is we can do that recoverable grant option with lots of foundations, donor advised fund sponsors like Ted was talking about today, and most of them are fine with it. They'll allow it, but they lose the assets under management while it's out. If they would actually allow us to make an investment, they get to keep it in the account, but most of them just don't want that headache, I guess.
Yeah, there lies the controversy.
Yes.
Miss Sue, do you want to add anything to this, or do you want to? I've got a couple questions lined up here.
Yeah, no, a quick word on why the money sits there. Much like what they said, another problem is it's just knowledge. A lot of people who started their donor advised fund at the regular, like the Schwabs and Fidelities, who are so good at encouraging them to start, don't tell them their alternatives. It's like, well, here are the options, pie number 1, pie number 2, pie number 3. And then they don't know that they can actually donate it to a community foundation staff to make more impactful investments in all our organizations. So,
and do you think that's because Fidelity is mostly known as a money manager and not really a philanthropic vehicle or manager?
I don't want to diss them. A lot of the people who are working at Schwab or Fidelity Charitable are very helpful.
Sure.
But the policy says, oftentimes it's like, oh, we don't, well, you know this, we don't tell people where to invest. So when you don't tell them, they don't know.
Right.
And if they don't, and if they don't know, then it's stuck at those Fidelity funds.
And that's true at foundations too, or community foundation. It's like, oh, if they express interest or this or that, but I'm not going to tell somebody where to put their money.
Right.
It's a little bit of a catch-22.
Back to my little quip about you opening DAFs all over. We are seeing some philanthropic investors and investors who want to unlock this money, intentionally putting money at places and then pushing through an impact investment, because often it takes starting from the inside, right? That we all know community foundations, when their donors say jump, they say how high. And so if the donor says, I want to do this deal, it's far more likely than the deal coming from outside. And then they will open up that opportunity to other players on their platform. So that's where we think there's additional power to be had.
Okay, so let's obviously a great conversation. First of all, thank you everyone for attending today. But let's switch and round out this conversation with a recent fun impact story that you guys have. So what does that look like at Beneficial? And Ted, what does a borrower story look like?
Sure. Well, earlier in our conversation, Mark, you talked about using pineapple leaves to make a vegan alternative to leather. You're talking about our borrower in the Philippines called Ananas Anam. They work with smallholder pineapple farmers, and they buy the leaves, which are normally considered waste, that the farmers actually change into fibers. And these are used to make an eco alternative to conventional leather.
Awesome.
And they're really not just improving the environment in the Philippines, but providing a lot of additional income to otherwise pretty poor farmers there. I'm happy to report that you can now buy your own pair of Nike sneakers made with
Awesome.
the Ananas Anam material. So can't
Totally cool.
can't see anybody's feet on this phone call, but next time we get together, I'm counting on everybody having a pair of these cool shoes.
Awesome. Vivian, how about you? Give us a quick story, and David, you're up after that.
Yeah, we a couple of years ago, we gave a loan to a nonprofit, about a $2 million revenue size nonprofit. They have identified a way to pivot and expand the way that they can make money. Instead of just 100% government grant model, they figured out a way they can get contracts from private contracts from healthcare providers.
Great.
Well, nobody would give them a loan. Nobody would give them the grant to seed that endeavor. We did $100,000, and then they paid off the loan early. And then just last month, I think the executive director called me and said, "I just wanted to let you know that no, kind of that situation. Nobody would support us in that endeavor. Now, 2 years on, we've almost more than tripled our revenue."
Awesome.
So we were very excited to see that success.
Awesome. David, what do you have?
Sure. Since we were talking about donor advised funds earlier and those recoverable grants, we facilitated a transaction for this phenomenal woman-owned engineering firm that creates microbial fuel cells for industrial wastewater treatment. So cleaning up waterways and generating electricity, phenomenal opportunity. She was growing fast, but and we see this a lot in the clean tech, the sustainable energy space, the regenerative ag space, the capital outlays for these small innovative companies, let alone being a woman in the engineering field, are very high, not bankable, no CDFI. Shouldn't be selling her entire company to venture in order to finance working capital and cost of goods and that sort of thing. So we did an initial $282,000 transaction using donor advised funds through an intermediate investment structure, returning interest. I think it actually averaged around 9% interest return to investors, bridged one of her first deals. And now we're working on a $10 million capital facility for her that will include a mix of donor advised fund and direct investors.
Great story. Well, thank you so much to the three of you. I super appreciate your time today and explaining a little bit about beneficial returns and loan donating, and of course, mission-driven finance. Wonderful to have you as colleagues in the space, and I look forward to connecting the four of us again soon. But what a pleasure to spend time with you this morning. Thanks so much.
You're welcome.
Thank you, Mark.
Mark.